Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, December the 20th, 2013. So I apologize for those who were looking for my video and announcements last week. I was not able to find the time to send out an update last week. I apologize for that. I didn't even have time to send out a text update. So there were a couple of important things I wanted to discuss in last week's video, and I mean, this is a little bit of hindsight. But I'm just going to kind of recap. This was an email that I had sent out to some of my, I guess, trading friends and some of the people that I share ideas with from time to time in the markets when we get to certain junctures in the market. So I'll just kind of cover off what my thoughts were. Now this was from I believe this was from December the 12th, and I didn't want to show the exact email because there's people's personal information in there, their contact information. But this was from December the 12th, and what we were looking at was, I should probably take Neil's name out of there, but I'm sure Neil won't mind. Neil is one of my trading room members. So basically, I was chatting with Neil about where we are in the stock market right now. Just thought I'd send this out for consideration for those interested. I was just letting everybody know that I hadn't given up on the long side yet. Even though the market was looking pretty negative, we were really close to support. And this is why support and resistance analysis is very important. Of course, I'm using the Dow futures as a proxy because that's what I look at. And there was the key level, 15,670. And I explained why I thought it was the key level. Because it was a breakout level we needed to get above from the middle of September. We congested at that level in October, November, then broke through, so a retest wouldn't be unheard of. So this was coming into last week's Fed announcement, which was on the Wednesday. So I was watching this into the Fed announcement to see if it might act like a catalyst off of that support level or that zone, with the understanding that, of course, anything can happen. So, I still have long-term targets in the Dow between 16,400 and 16,700 to the high side. So let me just show a picture. There was a picture that I had sent out as well at the time. This was a picture that I had sent out. And the reason why I'm covering this is not to say, I told you so, or, this is what I was looking at. But I think this was going into last week. I missed last week's announcement, but this is really the key thing that I was looking at. We had this congestion area in these breakout levels here around 15,670. And I thought that we might be setting up, even though the market was looking negative and it put in a high, then it put in a lower high and it was coming down. We had a really key support level here around 15,670. And I was saying, this is a potential bull flag, so we need to watch for a floor in the market right around this this breakout area here. You can see this was resistance. We sold all the way off. Then we came up, we tested it, we came down, we congested, and then we broke through. This was just a retest of that exact area or zone from the major breakout level of these new highs. So, there's a couple of key things I was looking at. Here we had the potential bull flag, which actually ended up playing out to the high side. Here was the support area. We were looking for a shift in momentum, and we were watching for the MACD to hold the zero line. So if we fast forward to today, this was posted out on December the 12th. I even marked the drawing there in the name of the file, December the 12th. And then if we fast forward to today, let me just clear this off. If we fast forward to today, what you can see happen was we did hold that support zone, and we've broken out to new all-time highs here. So these are new all-time closing highs in the Dow. So even though things were looking pretty negative, we're at new all-time highs. At this point in time, we're going into Christmas. I'm not really going to be doing a lot of trading going into the holidays, although I am a little bit I don't want to say upset, but I'm a little bit disappointed that I don't really have any positions on taking advantage of this move here. This was off the Fed announcement on Wednesday. You can see Thursday, Friday, we're just pushing higher. Now, having said that, Dow is at new all-time highs. I still have targets. Around You know what? Let me just flip the chart here. I lost a lot of my drawings because I was using the normal contract month. So if I go back to the YMZ13, which was the contract that was trading at the time, I'm going to have to start just marking up the continuous contract here so that I don't lose all of my notes and stuff when contracts roll over. For those that that follow or trade futures, you'll understand what I mean. And you can see here, we still have these targets around 16,400 to 16,700, in and around these levels here. 16,400 to 16,700. So I think this is still in play off of this bull flag, and I think we should, we could target some of these areas or some of those higher levels. But having said that, we've got, let me just flip back to the other chart. We do have momentum. Momentum is starting to get a little bit overbought here. But having said that, the MACD, it held above its zero line, and you can see momentum is getting overbought. But momentum, if we get into a good trend, can stay overbought, for a long period of time. As we noted in this area here. So this is something that even though we're getting overbought here, we can stay overbought for quite a long period of time. So if we look at some standard technical analysis techniques, just based on this last move here, if we were to project, for example, if we were to look at, let's say, a 1272 and a 1618 extension off of this high to low, and then I think a 2618 would possibly be in play as well. That brings us into the 1618 brings us into 16,400. We've already tested the 1272 extension around 16,239. Here we came into a high of that on Friday, and the 2618 would bring us up to 16,919, and that's just using a projection off of this bull flag. So if we look at that, that still lines up with what I was looking at in my previous analysis. So I think that this is still 16,000. Let's do this in green. 16,400 to 16,700, I think, is still possible and still in place. So I don't want to spend too much time on this. I think it's pretty clear. Let's take a look at some of the other markets. Let's look at the S&P futures. You can see that the S&P futures, same thing, all-time new closing highs when we're staying, we held this breakout level here above 1750, and we have potential targets as high as 1850. So this looks very constructive. The indicators look the same here. Momentum starting to look overbought. MACD is just starting to roll over to the high side. However, but we've had this divergence in all of the stock indices for quite a while, where you've got the MACD here is putting in a lower high here, or it's divergent where the price is going higher. Now, having said that, I think this pullback here, this sort of bull flag here, where we pulled back and then we broke through, may have reset this divergence here. So we'll have to see going forward. And then if we look at the NASDAQ, NASDAQ futures are breaking to all-time new highs as well off of this mini cup pattern. I wouldn't even consider that a cup pattern because it's not long enough for the standard definition of a cup in terms of the length of its base. But you've got this sort of wraparound and we're pushing to new highs. And if we look at the Russell, you can see the Russell put in that kind of a bear flag too, but it's just coming back and retesting its highs. So if we were to actually go through and do an analysis of the markets in terms of relative strength, I would say that the Dow looks to be the strongest market from a relative basis. And then I'm not sure. I think there's the NASDAQ. The S&P, the NASDAQ and the S&P look pretty close to me, without actually going and crunching the numbers. Just going by eye, the NASDAQ, there's the S&P. The NASDAQ and the S&P look pretty close. They're both above their recent highs, and they're at new all-time highs. And then if you look at the Russell is still just testing its recent highs. going back, I guess, to the beginning, the end of November, beginning of, oh, I'm sorry, the middle of December, going back a couple of weeks, I believe. I'm not reading the dates properly here, but from this swing point here, going back, they're still below. They haven't broken above, so I think the Russell looks the weakest on a relative basis. So the takeaway from all of this, kind of long-winded analysis is that the stock market is not giving any indications that it's ready to roll over, and I'm not really going to fight the trend. I'm not participating a lot right now just because I'm gearing down for the holidays. But that being said, there's no reason to fight this. The trend is still higher until it gives us an indication that that it's not going any higher, and that is not. I don't see that anywhere in the charts except for the possibility of a minor divergence. But until the actual price action breaks down, we just look higher. So let's move on. Let's look at some currencies. Let's look at the dollar index. So the dollar index, you can see this week is challenging this trend line. I'm just going to kind of move things and try and fit it a little bit better. This isn't a decisive break. We do have some positive momentum here from a MACD standpoint and from a slow stochastic standpoint. The trending indicator is still net negative. But, if we get a decisive close above this trend line and above $80 and I guess that's 85 or 86, 80, 85, 80, 86. If we get a decisive close above this, I think that's going to put me more on the bullish side of the dollar index. You can see here off of this low, we put in a lower high, or I'm sorry. So we had a low, higher high, or lower. This was actually a lower high. Okay, let me just be clear on this because apparently I don't know the difference between a higher low and a lower high. So here we had a low. Here we had a lower high, right, relative to this high. And then here we pulled back. We put in a higher low. And now, the question is, are we going to punch up through here and retest this level and possibly put in a higher high or not? Okay, so here's really the question. I think where the rubber really meets the road or where this market really inflects is a decisive close above this major support level. And having said that, let's just get rid of some of these. I think that one is still in play. Let's get rid of this fib. It's a little bit confusing, and for some reason these fibs have moved a little bit. So let me just redraw them. Okay. Down to this low. So, if we do actually break above this trend line, then I think, you've got a zone here between the 50% and the 61.8%, and we have a level that comes almost right in the middle of that zone. So that's sort of the zone that I would be targeting if we do catch a bid and close decisively above this support level. So, the breakdance fight continues. This isn't any kind of a major development by any stretch of the imagination. It's just, sort of a push and pull between the dollar and the euro. And if we look at, let's take a look at the euro, just for comparison's sake. We were looking at that $1.38 key level, and in not last week's video because we didn't put in a video in last week, but the week before, I believe we were talking about, coming up and testing this key $1.38 level, $1.38.21, $1.38.22. So you can see we did come up and test that level, and we sort of put in what's looking like a potential double top off of that level. Now, the real definition of a double top, this would really have to, fail, I guess, from a traditional sense, fail the apex, and that's a long way off, or this pivot point, if you want to call it a pivot point. But it looks like, we put in some resistance here around $1, just over $1.38. And now we are, I wouldn't say we're super negative, but you can see that, I think the euro is kind of, done its thing. And in order for it to stay very positive, I think we need to get above $1.38, $1.38.20. We need to get above those levels. So I think the real, in order to get a real indication, just flipping back to the dollar index, I think you really want to see if the dollar index is going to, since it put in a lower high, a higher low. Sometimes I mess this up verbally. Here we put in a higher low. and we put in a momentum shift here, and we put in a a candlestick pattern that I like to watch. We put in a hammer where it got accumulated all the way back up to the high of that candle. That's very constructive. So if we get above this, I think that's really what you need to watch to see if we're going to catch a bit in the dollar index, and if potentially the euro is going to go lower. The euro chart looks a little bit messier to me. So when I look at the euro, I mean, I don't really have a lot on that, but the dollar index looks a little bit more clear. So I think if we, if that happens, I'd be looking at, the euro coming down and testing some of these lower levels around $1.35, possibly. Let me just delete that. Around $1.35, that would be the next probably level of liquidity. You've got a lot of activity in that area, a lot of congestion. So $1.35.23 would be the level I'd be looking for it to come down and test. If we do find some weakness in it, and we do see some strength in the dollar index. So let's take a look at the USD CAD. So the USD CAD came up and tested $1.07, almost $1.07.5. And at this point in time, I'm really not sure what to think of this. It's starting to look a little bit sloppy, but as long as we hold this trend line, I'm still net positive on it. The bounces are starting to look a little bit tighter, but we still are putting in higher highs and higher lows. So from that perspective, I'm still net bullish on the USD CAD, and we still do have some positive momentum there. Although you can see there's a bit of a divergence here, right? Put in a higher high there, and here you put in a lower high in momentum and in the trending indicator. So I'm looking at this with I'm cautiously optimistic. But we really need to hold that trend line, and in order to get things going, I think it's still possible to test some of these higher levels around 109ish. But this is a little bit. This whole situation here is a little bit cautionary. You've got divergences in all of the technical indicators that we look at, so that's a little bit cautionary to me. So the trend line, I think, is going to be the line in the sand to see if we're going to hold that. That minor uptrend or not. So I hope I've made myself clear on that. Let's look at some other markets. Let's look at the crude oil. So I think the crude oil has the potential to test. We're already at $99, so I don't think it would be much of a stretch to come up and test $100 a barrel. Let me delete some of these fibs. I know this can get kind of confusing. So oops. Okay, not sure what happened there. So we have this high in place and we have this low in place. And you can see that, from a fib perspective, here's your high, here's your pullback, here's your low, right? There's your high off this major move, here's your low. And you can see here we've broken this trend line, and, we're putting in, this is constructive, we put in a higher low. And you can see here, where the 50% retracement comes in, right around $1.132, and then the 50% comes in at 101.55 to 103.81. So this level's been on our chart for a while. $101.32 a barrel. And then the 50% retracement almost overlaps that level. And then you've got a zone all the way up to the 61.8. So I would not be surprised at this point. I don't think it would be much of a stretch of the imagination to see a push into this level. This is seems to be a pretty key level here from a fib perspective and just from a support resistance analysis perspective. I wouldn't be surprised to see a move a little bit higher into like 101 half, $101 a barrel, $100 a barrel, even all the way up into almost $104 a barrel. So I think that's sort of what we have going on for the crude oil. You can see here, though, we're really overdone in momentum, but the you've got zero line resistance here in the MACD, but I think, I don't think it would be that much of a stretch to see a push into those levels. So we'll see if we get some kind of a blow off in there, or, to see, we just had an 8-period moving average crossing above a 21 exponential moving average. So this is pretty constructive from a trend analysis perspective. The last time this happened was back here where we went negative. and now, here we've gone positive. So from that perspective, we could be kicking off a new trend, or we could just be, retracing, doing a bounce of this last downtrend. Okay, so that being said, that's all I really have on that. So I think those are the levels that are possibly in play. Let's take a look at the USO. So the USO looks very much the same. And if we look at this is just an ETF that tracks, that's tradable. If you look at OIL, looks very much the same, another ETF. Let's jump over to the natural gas. So I think we were talking about a couple weeks ago, we were talking about the natural gas potentially testing $4.24, this level up here, if we could get above 402 and 408. So you can see here, we really broke through that decisively on this wide range bar, and then we just kind of didn't look back, and we went right into 424. We even went as high as the 78.6% retracement at $4.48. So natural gas is looking toppy here, but it's looking really, really strong. And some of the traders that I know that trade natural gas, showed me some of the long-term charts and some of their analysis. And if you look at some really, really long-term charts, I won't look at them here, but, even going into $10 is just a normal retracement on those long-term charts. So, I think that we're short-term a little bit toppy on the natural gas here. But having said that, natural gas could go to $10, and it wouldn't even really, it wouldn't even be that significant on the longer-term charts. I'm not saying it's going to go to $10 anytime soon, but, this move is not, putting it into perspective. This isn't really, it's a huge move. Don't get me wrong. This is a huge move here, this last swing low to swing high, but putting it into perspective on the long-term charts, it is just a normal retracement, in a downtrend. Okay. Now, having said that, one of the things that I was talking to one of my trading room members about was that, we were talking about the possibility of shorting when we got to resistance. And, I had mentioned that my trending indicator here turned positive in this area. And for that reason alone, I was not interested in shorting this area at all. I was saying, we might get a pullback, but I think we're going to push through eventually. And that's exactly what ended up happening. We didn't even really get a pullback. We just pushed through. But I didn't want to fight this, because when you see like going all the way back from June of 2013, we were negative, and then we cross over. We're ready for a move here. This usually tells you that you're ready for a pretty decent move. So I did not want to fight that, and that sort of played out. At this point in time, looking forward, I don't really know what to think of this. I mean, if we get into a really strong trending situation or continue, this has been a fairly strong trend. If we continue this, then we could push all the way into $4.78. But having said that, I would like to see some kind of significant pullback first. If we could pull back into the 21 exponential moving average, retest the 618 around 424, hold that level, and then push higher, that would give me more confidence for a move into, $4.78. So as long as we're tracking above the 21 exponential moving average and above this trend line here, I think we have the potential to go higher. I just don't know if we're ready, if we're due for a pullback or not, because if you look at this kind of a move here has been, we haven't seen this in a long time, and I don't know if this market is just going to go momentum on us, or if it's going to act more like a two-sided reversion to the mean market where you get this nice sort of stair-stepping versus, a momentum market where you just kind of break out and you just keep running. So that I don't know at this point in time. But having said that, I mean, I think we just really need to see if we're going to hold $4.24 and then see if we're going to get a push back up to the high side. Do I think this is tradable? At this point in time, I don't think it is. I think you need a deeper pullback, or you need, some kind of consolidation and a breakout. So I don't really have a lot on this going forward other than what I've already mentioned. So let's take a look at some of the metals. Gold really took a beating, and, gold could potentially go a lot lower. Once we had, initially I had said a couple weeks back that I think gold could go, all the way down to 1050. And then this one big update here, sort of changed my mind, and I thought, okay, maybe we found a bottom in gold. But that just goes to show that this market, it really flip-flops, and it's really a tricky market. So that being said, I don't really have a bias on gold here. I think it could go higher or lower. But what I do think is that, what I can point out that's pretty obvious is we've come down here and tested this low. And the question is, are we going to hold this low around 11? I believe that's 1181. If we hold that low, then obviously we have the potential to go higher. But if we break this low, then I think 1050 is in play. 1,000 to 1,050. That doesn't really, maybe this will be better. 1,000 to $1,050 per ounce, I think could potentially be in play if we break this low decisively. So that being said, I'm really looking at this. You can see we're at this point in time, we're holding this low for 2 days, and we really need to see what's going to happen there. This is really sort of where the rubber meets the road. And, it's looking like, if you look at this from, this is starting to look like kind of a head and shoulders, and this is sort of looking like the neckline. So if we break this, we've got the potential even to move the distance of, this amount here. So I think I'm going to give this another week to develop and see what happens. If we break this level, then I think we're really going to get some downside. But if we hold this level, then, retracements are in order. So I'm going to give this another week to develop and then reassess this next week and see if we have anything substantial setting up. So let's take a look at silver, see if silver can give us a better indication. And, silver's, pretty much the same sort of thing. You've got this sort of sloppy head and shoulders, and then you've got, on a relative basis, silver is stronger than gold. It hasn't even come down and retested its lows. So, we should watch silver too to see what it does. And if we look at copper, copper's been a lot stronger. So, you've got some sort of divergences between these metals for whatever reason, and copper still looks, I don't know, copper even looks like it has the potential to reverse on the trending indicator. So I'm a little bit less clear on, I'm actually not that clear on the metals, at this point in time. So let's just take a quick look at the bonds, and then we'll wrap this video up. So I think there's something interesting happening in these markets here. If we look at the bonds, seem to be holding this low around 128 and 9/32 in the 30-year, and we're pushing higher here. This isn't all that really that clear to me, although we seem to have broken this sort of down channel. But let's look at all the charts and see if we can come up with a consensus. So here's the 10-year. It looks fairly weak, and if we look at it from a retracement standpoint, from this low to that high, we're right at the 618 there. The low of this sort of hammer candle held the 618 around 123-ish. But let's look at the inverse. Let's look at the 10-year yield. So this is really, I think, this is an interesting level that we're coming into. I think that, in my opinion, and I'm going to mark on the chart here, I think that this is really an interesting level. I'm going to mark it, pretty bold, around 30, which would represent like 3% 10-year interest rates. So right there, I think, right around 3% in the 10-year looks, let me just delete this, looks really like, to me, this is like a line in the sand, and this is like a battleground to me. And, this is kind of how I look at it. I think if we come up to 3% in the 10-year, this is really going to be sort of an inflection point, and we're going to see like if this level is going to be defended, and this is going to push, this is where maybe the interest rates will get, smacked down, and bonds might go higher. Okay, so I think we really need to watch this level. There's a lot of implications at this level around, this should be, 3% in the 10-year. Excuse me, 3% in the 10-year. And I think that we really need to watch this to see where interest rates are going to go in the future. If we break this level decisively and we hold, then that's going to tell you that interest rates are ready and set to move higher. But if we come into this level and you see the, the Fed or, whoever really is in control of this market, really gets aggressive here and pushes the bonds higher, then you're really going to see interest rates go lower. So this, I think, is a line in the sand. It's an important level. We really need to watch this level to see what's going to happen going forward. There's going to be a real, I believe this is an inflection point, and this is really where the rubber is going to meet the road here in interest rates. You can see when we came up close to this level before, it got pushed down pretty hard, and then, we're right back into this level. So you can only knock on a level so many times before it gives out. But having said that, I mean, this is the second test in a long time, and this is going to be an important measure to the economy in terms of, our interest rate's going to go higher and lower and all the implications that might entail. So I'm going to wrap up the video here. This is a little bit longer than I wanted the video to be, but I wanted to give a little bit more analysis for the simple fact that, we're going to be going on holidays, and I missed last week's update. So having said that, good trading, good investing. Have a fantastic holiday season. I may post out some videos over the holidays, even though I'm not going to be trading that heavily. I'll still be looking at the markets and analyzing the charts from time to time. So have a fantastic Christmas. Have a fantastic holiday. A Happy New Year. And we'll see you in 10 or 15 pounds. And we'll look forward to seeing you either at the next video update in the new year, possibly at the next CSTA Oakville chapter meeting, which will be taking place the 2nd January of the second Wednesday of January. So good trading and investing. All the best. Have a fantastic and safe and happy holiday. Take care.